Hey everyone, welcome back to Corporate Decoder. Today, Mobileye Global Inc. and MBLY just filed their quarterly report for the period ending the 27th of June 2026. We are going to dig into their latest financial health and see what story these numbers tell. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows some pretty big shifts, including a massive Goodwill write-down that dramatically changed their balance sheet. Let's dive into the numbers to see what really happened. First up, their balance sheet. As of the 27th of June 2026, Mobileye's total assets took a big hit, falling to about $8.8 billion from $12.5 billion at the end of the previous year. Now, a lot of this drop comes from Goodwill, which we will get to in a bit, but their cash also went down significantly, from $1.8 billion to about $1.3 billion. This is thanks to a large acquisition and some stock buybacks. They are holding onto their inventory though, about $310 million worth, which is pretty stable from the prior year. Now, let's talk about this big number. In the first quarter of 2026, Mobileye recorded a Goodwill impairment loss of $3.788 billion. Essentially, they realized that a big chunk of the value they had previously assigned to their Mobileye reporting unit, which is mostly derived from past acquisitions, was no longer realistic. This often happens when a company's stock price drops significantly or when market conditions become much less certain, as they mentioned due to global economic and geopolitical risks. This one write-down is a huge red flag that their previous overvaluations of acquired assets have come home to roost. Looking at their income statement, the picture is a bit mixed. For the 3 months ending the 27th of June 2026, they had a net loss of $21 million. That is actually better than the $67 million loss they had in the same period last year. However, for the first 6 months of 2026, their net loss ballooned to a staggering $3.839 billion, mostly because of that Goodwill impairment we just talked about. Without that impairment, their adjusted net income suggests a much healthier picture. It shows their core operations are still generating positive results. Revenue for the 3-month period was $508 million, a slight increase from the $506 million in the same period last year. For the first 6 months of 2026, revenue jumped to $1.066 billion, up 13% from $944 million a year ago. This growth is driven by their EyeQ system on chips, which is their main product, and a significant increase in their SuperVision system sales. Where Mobileye is really showing strength is in their adjusted gross profit. For the first 6 months of 2026, their adjusted gross profit was $703 million, and their adjusted gross margin was 66%. This means that after taking out certain costs like amortization and stock compensation, they are making a healthy profit from selling their products. However, their standard gross margin is lower at 48%, showing that those excluded costs, especially amortization from acquisitions, are quite significant. Mobileye is continuing to heavily invest in research and development. For the first 6 months of 2026, they spent $530 million on R&D. This is down slightly from last year, but they did benefit from a new Israeli R&D law that gave them a credit of $110 million, which reduced their reported R&D expenses. They are bringing this technology to market though. A major event this quarter was the acquisition of Robotics on the 3rd of February 2026. They paid about $637 million for this company, which is focused on humanoid robotics. This acquisition signals a big strategic push into new areas beyond just self-driving cars. It is a bold move that could open up huge new markets or stretch their resources thin. The deal also involved issuing shares to the Mentee founders, including their own CEO Professor Amnon Shashua, raising some governance questions we will touch on later. The allocation of the Mentee Robotics purchase price shows a significant chunk going to intangible assets and Goodwill $128 million for intangibles, and $498 million for Goodwill. This means they are betting heavily on the future value of Mentee's technology and potential synergies. This acquisition also came with some management attention. Professor Amnon Shashua, the CEO, and Professor Shai Shalev Schwartz, the CTO, are founders of Mobileye Robotics. They recused themselves from the board's approval of the deal, which is a good sign of ethical practice. But the fact that such key figures have significant stakes in both companies involved is always something to watch. They also granted a lot of stock and restricted stock units related to this deal, which will impact future share count and expenses. Mobileye relies on a few big customers. Customer A alone accounted for 28% of their revenue in the last quarter and 32% in the first half of the year. Customer D, C, and B also represent significant portions of their business. This concentration means that losing or seeing a decline in sales from any one of these major customers could severely impact their financial results. The legal side of things shows they are dealing with some patent disputes. They are involved in a patent infringement lawsuit with Facet Technology Corp. While some of the patents in question have expired, the legal battle continues. They are fighting it aggressively, but these things can be costly and unpredictable. Looking at their risk factors, they are concerned about broader economic slowdowns, especially in key markets like China. Global trade policies and sanctions are also a worry, as these can mess with their supply chain and costs. The development of regulations for autonomous driving is another big unknown that could impact their future. When we look at their adjusted net income, which removes one-time charges like goodwill impairment and acquisition costs, the picture looks much better. After these adjustments, they had an adjusted net income of $155 million for the first quarter of 2026. This shows that their core business is profitable and growing despite the hit from the goodwill write-down and acquisition expenses. Overall, Mobileye is a company in transition. They are still a leader in advanced driver assistance systems. The revenue growth is solid, and their core operations appear profitable when you look past the big write-downs. The acquisition of Mentee Robotics is a bold bet on the future of robotics. But it also brings execution risks and potential dilution from stock grants. The goodwill impairment is a stark reminder that growth through acquisition can be risky, and they overpaid for past acquisitions. However, their strong position in the automotive AI market and the ongoing investment in R&D position them well for the future of driving technology. The biggest risk I'm watching is their heavy reliance on a few major customers. If one of them pulls back, it could have a significant impact. Also, the success of their big bet on humanoid robotics is still a huge question mark. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you like this deep dive. Give it a thumbs up and subscribe for more. Hit that notification bell so you do not miss out. Join our Discord community for more discussions linked below.